You probably clicked on this video because you're making the life-changing decision of buying a home versus continue renting. And I get you. I went through it myself about 2 years ago, calculating which option was better. We were renting in Toronto and were considering to become first-time home buyers in Canada. And let me tell you, it wasn't an easy decision. But many of you know what the outcome was. So this is what I think goes through most people's mind, more or less, when they're considering to buy.
My rent for my one-bedroom apartment is $2,200 per month. But right now, there are one-bedroom apartments for sale out there that cost $450,000 to $500,000 with a monthly mortgage of about $2,100 to $2,500 per month. So instead of wasting all that money on my rent, I might as well just buy a house and build some equity, right?
And it can definitely make sense to buy instead of rent financially. But renting sometimes can be the better investment. So what does it actually depend on? Several things to consider when making an investment. Return, so if you're likely to earn a profit or make a loss. Cash flow, because you could be making a profit, but your cash flow, so money flowing in and out, can't keep up. And the risk. Here, the probability of the home you're buying going up or down in value, risk of interest rate fluctuations, and so on. So now let's move on from jargon to concrete examples. And by the way, guys, let me know in the comments down below, how much is your rent right now if you're renting, and how much are the monthly mortgage payments of the property you are considering to buy? Example 1. Let's say your monthly rent for your one-bedroom condo is $2,200, and we're leaving out utilities because utilities apply to both buying and renting. And right now you're considering to buy your first condo that costs $500,000. But despite saving like mad these past years, your down payment is just 10% or $50,000. And let's say that the best mortgage rate that you could get was 4.5%, and this mortgage runs for 25 years. So your monthly mortgage payments would be $2,504. Awesome. At first glance, at least, your mortgage payments would only cost you $300 more than your monthly rent, and you're building equity in your home, right? As part of the payments go towards paying your loan and interest, and part of it is going towards your equity. But what many people forget is that the cost of owning home is not just the mortgage. That's just the start of it. There's also property taxes, insurance, and maintenance. Let's say that property taxes are 0.75%. So that's $500,000 times 0.75% divided by 12 months equals $312 per month. And insurance, depending on your coverage, let's say $60 per month. Add maintenance on top of that. There's no cell for that, so I'll just plug maintenance in here. Could easily be $450, bringing your monthly payments to $3,326 instead. That is about $822 on top of your mortgage, or 25% of your total monthly housing costs. Short recap, so cash flow wise, we're spending $3,326 per month on buying a home versus $2,200 on renting. Remember, that's on top of the initial costs of closing the home, which includes the down payment, CMHC insurance for down payments under 20%, and also taxes. But now you might be asking, which of these two options is more profitable over the long term? Which can grow my wealth? In this video here, I'm not going to do the detailed calculations and math and just use this calculator here instead. So I plugged in the numbers, comparing rent at $2,200 versus buying a home for $500,000 with a 10% down payment, 4.5% interest rate, and 25-year term, and adding all the homeowner costs here. And now we're getting to the interesting part, which will make a big difference in your decision. Your expectations about how much your property will appreciate or grow in value versus how much your rent will increase, because these could change a lot throughout the 25 years of your mortgage term. Yes, condo prices have dropped lately, but let's take a longer term view and assume that your condo will appreciate on average by 5% per year over the long term throughout the entire 25 years of your mortgage. On the other hand, let's say that your rent, if you rented, would increase by 2% each year in the same time frame. If we compare renting versus buying over 25 years, renting would cost about $1.3 million more than buying. Your cost of renting would total $845,000, while based on your assumptions, you would earn $457,000 from your home if you'd sell it after 25 years. So this assumes you gained $1.1 million from appreciation of your home, while you spent $308,000 on mortgage interest, $100,000 on closing costs, and $246,000 on home ownership costs. Sounds like a great deal, and so far it seems as though buying is definitely better than renting. But things change a lot if we change our assumptions just slightly. Now let's say you sold the home after 5 years instead of 25 years. Immediately, the profit would be smaller because of the high initial closing costs. Let's also say that you could only secure a 5% mortgage interest rate instead of 4.5 or 4.2 because of your credit. And you're a bit more conservative, believing your home would only appreciate by 3% each year, while your rent would likely remain quite consistent. Now, both decisions are almost the same financially here. This simple example shows that it is not as straightforward, but that the best decision depends on many factors and assumptions, including but not limited to the time frame you're holding your home for, the mortgage interest rate you can secure, and the appreciation of the property, which again depends on demand, a lot of which is driven by immigration and population growth or non-growth, and supply. So before you make a decision, I recommend you to run your numbers and your own assumptions through these calculators. I will link both of them down below, the mortgage payment calculator and the rent versus buy calculator. The truth is that profit on home buying is actually made at the point of purchase. If you buy a home worth $500,000, undervalued at $400,000, then you are securing a huge gain right away. But if not, there is only so much certainty as to how much your home will appreciate. So based on this example, it seems like buying is still the better option. Tell me guys, what do you think so far? Is renting or buying the better choice? Let me know in the comments below. I'd really like to know your thoughts. But before you jump to conclusions about my opinion on this though, please do watch the video to the end to see what my full take on this is. Now, to compare renting versus buying further, I just want to tweak the examples further to show you how quickly things can change. But before we do that, here's one piece of great news. No matter if you buy a home or continue to rent, you can earn a stack of cash back very easily by paying your expenses. Yeah, whether that's property, taxes, maintenance, insurance, or your rent, using your credit card. And yes, you can totally do that by using a service called Chexi. Chexi is an awesome service that lets you pay your rent, bills, and now even taxes with your credit card. You can earn thousands of dollars in rewards just by paying the bills you already have. And it's super easy. Just sign up with Chexi, tell them what you want to pay, rent, condo fees, car lease, utilities, parking, property taxes, and now even income taxes. Choose your payment method, Interact, pre-authorized debit or PAD, or bill payment. Enter your credit card and Chexi handles the rest. They charge your credit card on time and send the payment exactly where it needs to go. Now here's how you'll earn extra money. Let's say that your rent and your bills total $2,800 a month. If you're paying straight from your bank account, you'll earn next to nothing, aka you're leaving money on the table. With a 4% cashback card, even after Chexi's small fee, you'd get an extra $63 a month or $756 a year in cashback. And when you've reached your card's spending cap for recurring payments, simply switch to another cashback card. And it doesn't stop there. Got a $4,000 tax bill? Paying with Chexi with that same 4% cashback card could put another $90 in your pocket just for that one payment. It only takes seconds to sign up, so don't miss out on that extra cash. The link for signing up to Chexi is in the descriptions below. Thank you Chexi for sponsoring this video. And now back to the video. Now in our previous example, buying cost $3,300 while renting was $2,200. But what if the difference was much larger? In Jakarta in Indonesia, where I lived for some time, the ratio of rent to property value for homes is between 2 to 3%. That means renting a property that costs $500,000 would only cost $10,000 per year, or only $833 per month. That changes things. Now, of course, you can't rent for $833 per month in Canada, but for the sake of comparing, let's just imagine that you could rent for $1,500. And it might just be the case for some of you who secured a great rent deal 10 years ago and have an awesome landlord who doesn't raise prices. Let's do the same comparison now. In the same calculator, let's input rent $1,500 while everything else stays the same. In this case, if you held your property for 25 years, renting would still cost more, $261,817 more than buying. So technically that would be your loss, no profit here. But here's something people often forget to consider, and that is cash flow. Now pay attention to the following because it will influence your decision. Let's say you had $3,326 available each month to spend on housing. If you buy, then your monthly cash flow would be minus $3,326. Gone, zero left. But if you rent, in this example, your monthly cash flow would be minus $1,500. You would still have the difference between $3,326 and $1,500 equals $1,826 left per month that you can use for traveling, shopping, or to invest. If you invested that difference of $1,826 per month and compounded at 8% per year in the stock market, at the end of 25 years, you would almost have $1.7 million. Now, if a person actually had the discipline to stick to this, which option, buy or sell, would be better now, financially speaking. And that's just at a return rate of 8% per year. If you have even better ways to invest the money, you can grow your wealth even more. But here's the problem. The reality is just that not everyone actually has the discipline to invest the difference. If there's a difference, but it's spent on consumer goods instead, then obviously there's no profit here. And this psychological reality is something I'll get back to later. And our following last example will show you how sometimes buying can be the obvious choice. Remember that in the previous example, we assumed a home price appreciation of 5%. These are based on averages. But the home you're buying is not an average. You could be buying the wrong home in the totally wrong neighborhood, which only appreciates by 1% per year over the long term, or worse, continues to lose value even over 10 to 20 years because of the declining neighborhood. On the other hand, you could be choosing a home that was undervalued to begin with in an up-and-coming neighborhood, resulting in an 8% per year appreciation. See, here we're talking about specifics, but the problem is, who knows for sure? But for the sake of this example, let's just assume that the home you plan to buy appreciates by 8% yearly. That would result in totally different numbers. In this scenario, you'd profit almost $2 million from buying the home and holding it over 25 years. Renting instead would cost you $2.3 million over the same time. So even if you took that difference in cash flow between your mortgage and other monthly costs and your super cheap rent of $1,500 and invested that money, buying a home could still be the more profitable option. Let's go one step further and assume we go back to a super low interest rate of 2%, like we had back then. In that case, you would profit even more from buying a home.
So, are you saying that buying a home is always better?
As explained in these scenarios, it really depends. Plug in the numbers and see for yourself. Going back to my home purchasing decision 2 years back, in case you don't know, my husband and I decided to buy a small condo, a studio apartment in Toronto. Had we just considered the financials, wait, is there anything else to consider? I'll get to that in a moment. We would not have bought. No, this is for real. At that time, we were actually renting a smaller studio for $1,200 per month that only went up by 1 to 2% each year. And we traded that for a mortgage plus monthly costs of about $3,200 per month now. If it were a pure financial decision, we would have just stayed in that tiny studio. We would have taken the difference, $2,000, and invested it into all the things that I talk about here in this video. But here's the most important point of this video, guys. Buying a home to live in, not a second or third property to invest in, but for you and your family to live in, is not a purely financial decision. And that is the thing that many people forget when they're considering their decision. Sure, you have to consider financials, meaning you have to be able to afford buying a home and not be over leveraged. I think you should also have money left over to invest in other assets. But when buying a home, there are some other things you need to consider as well. And it's not as simple as investing into the stock market, and I'll tell you why in a moment. Guys, if you have money saved up right now and you want to invest it but just don't know how, consider investing using online platforms like Questrade. It's really easy to sign up for, and unlike traditional banks and brokers, there are no account fees or monthly fees, and even no trading fees for stocks and ETFs. And you'll even get $50 in cash back when you open a self-directed account using my link and referral code in the descriptions down below. So here's the truth. Buying a home to live in is not a purely financial decision. A home is a shelter, a place to build a family and create memories. That's why it's important to also consider qualitative and not just the quantitative factors that are hard to predict anyway, things that are difficult to state in money terms. Let's consider the advantages of renting now. Flexibility. You can move in or out with relatively short notice, making it ideal for people with changing jobs or life situations. If you buy a home, you're committing to staying in one location for a longer time at least, because selling takes time, money, and paperwork, and even when you rent it out, it comes with its own set of responsibilities. On the other hand, when you rent, you have lower responsibilities. As a renter, you're not responsible for maintenance or unexpected repairs, saving you time, stress, and money. When you buy a home, all those issues become your problem. And when it comes to lifestyle options, renting allows you to live in prime or high demand neighborhoods that may be out of reach for you if you were buying. This can mean better access to transit, amenities, or simply a lifestyle that fits your current stage of life without the long-term financial commitment of home ownership. When you buy, you might have to compromise on the location to afford the purchase, like moving farther out or settling for a smaller space just so you can get into the market. You see that what makes renting great is often the flip side of buying. And to make it complete, here are the advantages of buying. Buying a home forces you to save equity. Each mortgage payment increases your ownership in the property. It forces you to save money. When you rent, it's So easy to spend any extra cash on daily expenses or consumer goods rather than building long-term wealth. It also gives you a sense of stability and security. Owning your home means that you won't be forced to move due to eviction or rent increases by the landlord. You have long-term control over your living situation. When you rent, you're always at the mercy of your landlord's decision, lease terms, and market rate changes, making your living situation less predictable. And then, of course, freedom. Want to paint the walls, get a pet, or renovate the kitchen? Home ownership gives you the freedom to make it your own. And the more detached your home, the more freedom you'll have, of course. When you rent, you're usually limited by your lease and your landlord's rules, so big changes or certain pets might not be allowed without permission. And also, not to underestimate psychological satisfaction. Most people just feel a sense of pride, accomplishment, and peace of mind knowing that they own where they live. And that's the kind of happiness that you just can't buy. Or actually, you just bought yourself exactly that kind of happiness by buying your home. The fact that this topic, rent versus buy, is so controversial online is that it involves a lot of emotions and feelings. You will see how it goes in the comment section very soon. Knowing that, make sure that you have all your bases covered, both financially and emotional. Now, just in case you decided to continue renting and you want to know some hacks on how you can save money on your rent, then check out this video next.